CoinShares published their Q3 report this morning. With me, I have CEO Jean-Marie Mognetti. Welcome, John.
Hi, Martin. Great to be here.
Now, this is your first time presenting for us, so I wanted to ask you to pitch the company first. How would you describe CoinShares?
Oh, yeah, okay, of course. CoinShares is European crypto leading company since 2014. We have a massive technology and connectivity backbone, which is built by our in-house engineering team. On this infrastructure, we are building services. So far, we built 3 platforms, 2 which are very well known in Sweden, one called XBT Providers, the other one called CoinShares Digital Securities, and the third one is a partnership with Invesco. The other thing we're doing is that we are leveraging this entire infrastructure for the benefit of our capital market activities. In the future, we are planning to add more services beyond the one I just mentioned as an expression of our technology stack with a solid focus on consumer activity.
Now let's start a bit with the essentials that we got to know this morning with the Q3 report. The first 3 quarters, the first 9 months of 2021, adjusted EBITDA amounted to 89 million, and that's pounds, and that's with a margin of 81%. And this could be compared to a year ago, where the same numbers were 14.4 million pounds and a margin of 59%. That's quite an increase. What's the driver behind it?
Yeah, first of all, we are very proud of this number, and it's a reflection of all the hard work of our team. But I think the best way to understand this increase is to touch upon the scalability of our business model and how it interacts with the ongoing evolution of the digital asset space as a whole. So our technology backbone supports both our capital market activities and also our asset management platforms. We have developed this on an ongoing basis over the years to be able to handle increased volume of activity at a breaking stride. In capital markets, as we move into this year, our trading activities went up significantly. Average monthly trading volume have gone from around $654 million per month in 2020 to around $2.8 billion per month in 2021. So this includes both the execution of our own strategies and also the liquidity provision servicing we are providing. So the more we are trading, the more opportunities for gains, and we are generating, and if anything, higher volume of activity results in increased margin. So the incremental cost of undertaking significantly more trading, which are linked to the tech maintenance, are fairly minimal, so very interesting from our margin perspective. On the asset management side and the platform side, the management fees which we generate are directly impacted by the price of the underlying crypto for our ETPs. So as this fees goes up, again, the impact on our cost is fairly minimal because we don't need more people to manage 5 billion or 10 billion. It's pretty much at capacity in terms of people. So then we do not need to increase the staff accordingly and our overall costs. So costs related to storage and custody are the only costs which are moving along with the pricing. But again, these costs are going to go down in the long term as these kind of services become more mainstream. So I guess in summary, you could say that we ensure we were well positioned as a group moving into 2021 to capitalize on the continued evolution of the industry.
Now, this is over a 9-month period, 2021.
Sure.
How would you, if you get nitpicky here, compare Q3 to Q2 and 1?
Sure. So from an asset management perspective, Q3 was the second best quarter in our history, the second only to last quarter. So we also had some very significant gains we recognize in respect of our principal investment. The area of business that was down this quarter versus the rest of the year was our infrastructure and capital market business. And that is really due to the capital market activities itself, which was down because of less volatility and less transactional volume. It is worth noting that while down in Q1 and Q2, the overall EBITDA result of Q3 of 25.9 million sterling is higher than 2020 in its entirety. And the market action we have seen so far in Q4 is very promising.
Now, you touched upon it just before, but we've seen renewed attention in the entire crypto space just this fall, with the Bitcoin and Ether reaching new highs. How would you say this affects your ability to create revenue?
I think I can hear compliance team in my earpiece, so I'm joking. But so I'm going to say that, CoinShares listed in March 2021. pretty much at the price where we are now in terms of listing price. And that at the time, we were looking at 9 months adjusted trading EBITDA. Our current 9 months adjusted trading EBITDA is a multiple of 6 of when we listed. So we are scaling faster than the market is acknowledging our capacity to increase our revenue.
Now, you talked about the specific quarters, Q1, Q2, Q3. What would you say about the market action right now?
Well, I can speak for hours on that, and I think we have only 10 minutes, so I'm going to try to stay very quick. And in a nutshell, the market dynamic is back. The interest is picking up on all fronts. So my team and I are busy building and creating future value for our shareholders.
Now, I want to touch upon a bit operational stuff as well. You acquired Elwood Tech in July. How has this merger merged with the rest of the company?
It is done. It is finalized. It's fully integrated. The team is integrated within our overall research team and at work. They have been very busy since they joined us. We launched with our Invesco partners a Thai feeder in Thailand to support our equity product portfolio, which was following a Japanese feeder first. And we are now expecting an Indian feeder to come as well online by the end of November. So we are very, very busy on this front, and all the team is focusing on cloud acquisition, addressable market, and suite of product extension.
Jean-Marie, you've been so good, actually, keeping your answers really, really short and tight. So I'm going to give you one opportunity to raise one of the key highlights of Q3. What do you want to talk about?
I get a wild card. Great. Okay, so let me I'm just going to keep it short and keep 3 points again. So I think there was 3 highlights for us in Q3, one which is borderline Q3 Q4, but was work of Q3. So first of all, Invesco partnership is a great partnership for CoinShare. It brings a lot of tangible value, i.e. the fees, but also a lot of intangible value that we're going to be able to see over the long term as this partnership developed. The other thing which happened in Q3 is like the transaction we prepared with FlowBank. And FlowBank closed in early Q4, and it is not in our September balance sheet. But this is mainly a Nordic program, and I know how much you guys love Avanza and Nordnet platform. So if you love this company, you are going to absolutely love what CoinShare is going to do with FlowBank. It is a fantastic work in progress. And finally, CoinShare is about its people, it's about its talent, and talent acquisition is always a key focus for us. And we have been hiring. We are messing up our engineering team, for instance, and it is absolutely amazing the difference it is already making for us in what we're building and hoping to bring to the market very soon.
Thank you so much for taking the time answering my questions. Good luck to you and CoinShares forward.
Thank you very much, Martin. Have a good day.